Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into Airbnb's Q3 2024 earnings report. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss Airbnb's latest financial performance and strategic moves.
Airbnb has just released its Q3 2024 earnings report. Can you give us a brief overview of the company and what this report entails?
Absolutely. Airbnb, a leader in the travel and hospitality industry, has shown significant growth and strategic expansion in Q3 2024. The report highlights their financial performance, including revenue, net income, and key business metrics, as well as their strategic initiatives and future outlook.
Revenue and profitability overview. Let's start with the top line. Airbnb reported a net revenue of $3.7 billion for Q3 2024, which is a 10% increase compared to last year. John, what are the key drivers behind this growth?
The growth in revenue is primarily driven by a strong increase in nights stayed on the platform and a modest rise in the average daily rate, ADR. This indicates that Airbnb is successfully attracting more guests and optimizing pricing strategies.
Despite the impressive revenue growth, net income saw a decline to $1.4 billion from $4.4 billion in Q3 2023. What caused this drop?
The decline in net income is largely due to a one-time tax benefit recognized in the previous year. However, the current net income margin of 37% still demonstrates significant profitability.
And how about their adjusted EBITDA?
Airbnb's adjusted EBITDA reached $2.0 billion, reflecting a robust 52% margin. This underscores the company's strong operational efficiency and cost management.
Operational efficiencies and future outlook. Airbnb's operational efficiencies are evident in their free cash flow, which was $1.1 billion for the quarter. How does this position them for future growth?
The strong free cash flow, with a trailing 12-month margin of 38%, provides Airbnb with the financial flexibility to invest in strategic initiatives and expansion. This includes their focus on under-penetrated markets like Asia-Pacific and Latin America.
They also repurchased $1.1 billion of their Class A common stock. What does this indicate about their financial strategy?
This share repurchase is a strategic move to manage share dilution and return value to shareholders. It reflects confidence in their long-term growth prospects and financial health.
Looking ahead, what can we expect from Airbnb?
Airbnb is poised for continued growth, with plans to enhance their platform and expand globally. They are focusing on improving guest experiences and increasing their market share in key regions.
Strategic initiatives and market expansion. Airbnb's strategic initiatives seem to be paying off, especially with the increase in nights and experiences booked. Can you elaborate on this?
Indeed, Airbnb saw an 8% year-over-year increase in nights and experiences booked, reaching 122.8 million. This growth is supported by their app strategy, which saw an 18% increase in bookings, now accounting for 58% of total nights booked.
They've also introduced new features for guests. How are these impacting their service?
Airbnb launched over 50 upgrades in their 2024 winter release, enhancing personalization and user experience. These include recommended destinations and personalized listing highlights, which are crucial for attracting and retaining guests.
And what about their market expansion efforts?
Airbnb is actively expanding in under-penetrated regions, particularly in Asia-Pacific and Latin America. This is part of their global market strategy to tap into new growth opportunities and diversify their revenue streams.
Key takeaways. In summary, Airbnb's Q3 2024 performance highlights their strong revenue growth and strategic expansion efforts. Despite a decline in net income due to last year's tax benefit, their profitability and operational efficiencies remain robust.
Absolutely. With a 10% year-over-year revenue growth and a 37% net income margin, Airbnb is well positioned for future success. Their focus on strategic expansion and enhancing guest experiences will likely drive continued growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Airbnb's performance in the comments below.